Yo, yo, what is going on, everybody? Welcome to TrendSpider Live. My name is Mike, and today we have a massive day on the market, actually, because we have Micron earnings and also FOMC. And FOMC just released the rates, and it came in as expected, unchanged. And here's what the market is doing. Not much on that candle. This is the 5-minute candle that's the rates were reported on as unchanged. And if anything, we're slightly green. Got the MA cloud 921 EMA cloud on my chart on the 5-minute here. But if you guys are out there in the audience, let me know what you guys are thinking. Rates did come in unchanged as everybody was expecting for the most part. So yeah, now we're just waiting a little bit for Mr. Jerome Powell to come out and speak in about 30 minutes. So let me know what you guys are thinking going into this. Of course, Micron is reporting earnings today, which has been trending very well, very, very well. As you can see here on my Minervini trend template indicator, it is climbing very nicely, hit a new all-time high today going into earnings along with WDC. Let's see where the money is flowing. Let me edit this chart real quick here. Just got to hide my cloud indicator. Don't need that. As we can see, it looks like energy is still leading there. That orange dot is XLE. Clearly still leading. And what else do we got? We got, real estate and energy still the only things leading. We got semiconductors coming out of leading, which could change today, to be honest. But we'll see what happens there. Again, yeah, energy is just absolutely killing it still. Let's pull up the XLE chart real quick. Yeah, XLE actually not hitting a new all-time high today. It did yesterday, though. But it's still, over the last 7 days, is killing it. And over the last 30 days, it's the clear winner here. And then following that is utilities. So, yeah, interesting stuff. We also got RCAT reporting earnings today, I believe. And RCAT's actually looking pretty damn good on the daily chart right here. Let's go to the weekly. Looks like it's pretty much hitting new highs going into earnings. So that'll be a fun one to watch as well. But yeah, we'll just waiting here for Mr. Jerome Powell to come out and talk. So let me know what you guys are watching on the day. I have a lot of stuff on my radar. You know, Rocket Lab today, or actually yesterday after the close, after they had this nice breakout candle, they said they're doing a $1 billion offering, which is basically diluting the stock. What is going on? Hitarth. The meeting is in 25 minutes. 25 minutes until Powell. So, yep, we're waiting for that. It's at 11:30 Pacific Standard or like 2:30 Eastern. Yeah, Rocket Lab, interesting. Little breakout there and pull back. We got Cloudflare ripping pretty nicely, but DocN has been more so on my radar personally as this thing just rips higher. Kind of missed that move. So we'll see what happens there. Fix has still been in this Slim scan for a very long time. Yeah, oh no. We'll see. I mean, it'll be interesting to see what Powell has to say, if anything different. He normally is just, you know, saying we're going to let the data decide going forward and stuff like that. So we'll see. PL actually has a really nice little consolidation setup right there. Let's go over to my main chart while we wait here. PL does look kind of interesting. Let me add a watch list. Let's see what is trending on StockTwits these days. SWMR is absolutely flying apparently here on the 5-minute chart. Yeah, Swarmer looks like a. Have you guys seen this? SWMR absolutely flying. And FSLY, I've been seeing this one quite a bit. This one is trending like an absolute beast off this power earnings gap. FSLY is absolutely killing it, riding this 921 cloud to the moon. We got, again, DigitalOcean trending. We got RCAT trending. Honestly, fucking looking pretty good out there. I'm not going to lie. Have some really good names, but yeah, if you're just looking at the indexes, I believe SPY is down today. It's not looking that good on SPY. It's definitely still a stock picker's market, as you can clearly see here. Lulu is actually at 5%. They reported earnings yesterday. Of course, Micron is on here. I mean, this one's going to be the biggest one to watch by far out of anything. Yeah, there's no rate cut, no rate hike. They're just leaving the rates the same. That was pretty much priced in. So not a huge surprise there. I'm going to add some little momentum filter here at the bottom of my chart. So you can see what's going on. Yeah, momentum looks pretty damn good. I'm actually going to change that to the chats indicator. Yeah, chats indicator just flew right back up to the top there on Micron. You can see, there's a lot of good trends to ride in Micron. You can see the chats was very high for both of these uptrends here. Kind of dropped off here. And then just recently on this kind of breakout to the upside over the last few days, chats is right back up. Do you think people will sell the news or pump the S&P 500? What do you mean sell the news? There's not really much news here realistically. I mean, everybody was expecting the rates to not be cut. It was pretty much a 100% chance of that happening. So I don't know. Let's draw an anchored VWAP at the market open. That is the resistance that we're probably looking at today. Oh, a Micron. That's an interesting anchored VWAP right there, though. But Micron, I really don't know. I really don't know. Personally, I just had, here, I'll show you guys. Micron. So I should have taken Micron technically right there, like 451 or so, based on my custom indicator, as it broke above this pivot level from February 25th on some good volume. Momentum is strong. That's why the candles are green on my custom indicator. And relative performance is super strong. Hitarth, RSI is a decent indicator. I would look into something more like chats. RSI is at like 65, but to me, RSI is a very basic momentum indicator. I would much rather look at something like relative performance or internal like absolute strength, which is measured by the chats indicator, or rate of change even. That's what I use a lot too. But RSI is actually not that high on Micron on the daily chart. It's again at 65.47 or so, which again isn't that high. Which is interesting because the momentum is very strong, very, very strong on Micron. Yeah, Hitarth, the RSI, a lot of people say, high RSI means overbought, but honestly, what the RSI is, it's a momentum indicator. So you actually technically want probably the RSI to be high if you're following momentum. The fact that RSI isn't high is more of a red flag that the momentum isn't that strong. But it can be used in both ways. But in this particular case where the stock is clearly trending up and to the right, you do really honestly want to see a high RSI. You can also, on TrendSpider, we have the RSI divergence indicator. Let's see if there's any divergence. Honestly, it looks like a bearish divergence because, it's making a stock price is making a new high, as you can see, but the RSI is not, which is actually a pretty not good sign. But again, I don't really use RSI at all. Looking at the relative performance right here, it's at 99. Again, I'll add the chats. And it's also at 97, which is good. So we'll see what happens with Micron going into earnings. Let's go flick on over back to SPY here. By the way, we have the expected move from options indicator on the platform now. You can see the expected move for this week is marked right here. So it looks like, what is it at exactly? We're at like 431.26 and 505.02. That's pretty much the expected move for Micron for this earnings date, I should say. SNDK trending as well. SNDK has been absolutely flying as well. Another big one to watch along with Micron. Also incredibly strong. I don't know, you guys. I could buy Micron based on the strategy that I run, but I'm just not going to do that going into earnings. So luckily for you, if you're in Micron, since I'm not getting in, it's probably going to moon even higher. But let me go ahead and find the FOMC video stream so that I can actually stream Jerome Powell as he comes out and speaks for us. And again, Jerome Powell is coming out to speak in about 17 minutes. So if there's anything you guys are watching on the market that I am not seeing, please do let me know and we can take a look at it together. We'll take a look at Micron again here some more once I find this video. We are in March. Buy after earnings, sell off, ride it till 600. Yeah, I would actually love a sell off on Micron from these earnings, to be honest with you. I would absolutely love that. Let me find FOMC Live. Okay, I found it here. Bada boom. So once Mr. Powell comes out to speak, we will have it live. Oh, NBIS, that's a good one. I actually personally just got into NBIS recently. What day did I get on? NBIS to me looks pretty good still. I mean, they did have the offering news, and so did Rocket Lab. If I pull up NBIS here on my chart, yeah, I've actually been in NBI since the 12th. Stop move up to 105, basically 106 to basically break even, and it's moving back on up today. So if you guys see the price action, it had this breakout here on the NVIDIA investment news. NVIDIA invested $2 billion into NBIS. And then just a few days after, on the 16th, just like earlier, this week or Friday or whatever it was, Meta just signed like up to $27 billion contract with them as well, causing another gap up. Then directly after that, they sent out offering. They proposed, let me double check exactly what the news was. I know it's some sort of offering. Summarize the news on NBIS lately and plot the news events directly on my chart. See, guys, I'm using Sidekick right now to go ahead and analyze NBIS for us. I know relatively what happened in the news. I'm much more of a technical trader, but I do, follow these news events, especially when they cause these gap ups. And instead of having to go through, Bloomberg or whatever the hell you use, Benzinga for news, which we already have in the platform anyway, you can just ask Sidekick to plot all the recent news on the chart for us. So as you can obviously see right here, this was the Meta deal, which I was saying, and I guess a price target of 200. Again, the NVIDIA $2 billion investment right here. So we knew those things. What else happened here? This was NVIDIA physical AI plus, yeah. So it looks like $3.75 billion in notes. Where did my Sidekick go? Let's take a look at the full breakdown from Sidekick here. Sorry, guys. I have like 3 instances of TrendSpider open, and my PC wants to kill me at the moment. Oh, and I have this YouTube crap open. Let me just close that out. There we go. So here we go. Again, this is TrendSpider's Sidekick AI, summarizing the news events of NBIS right now for us. March 11th, NVIDIA invests $2 billion into them. Again, $12 billion Meta deal, up to $27 billion from Meta. I guess there is some analyst upgrades as well. And then it looks like there's a NVIDIA physical AI partnership plus the $3.75 billion convertible notes announced, which is essentially just dilution. And I guess the notes were upsized to $4 billion, which actually doesn't seem very good. However, the $4 billion is a near-term headwind. Dilution risk is real, and price is currently pulling back from that 132 high. And say, how big of a deal is this? Are those notes? I'm going to say also compare with RKLB recent offering, because I know RKLB just had an offering as well. But yeah, I guess on this, the notes being upsized, I mean, the stock is up pretty good today. It's up like almost 7% from open. So the market clearly, at least right now, doesn't care. Maybe it's just going to fill this gap and come back down. Who knows? You just got to respect the trailing stop regardless. But I can already tell you right now what is going on in SJD News, by the way. Let me know what you guys are watching as well. I'm currently looking at NBIS, and then also I'm going to look at RKLB in a second here. So it looks like the NBIS notes are structurally different, arguably more aggressive compared to RKLB. $4 billion is enormous relative to its size, which is 14% of its market cap. RKLB's $1 billion offering is only 2% of its market cap. So convertible notes are debt first, dilution later, which is essentially what NBIS is doing. They don't dilute immediately, but they will convert at some trigger price. That's interesting. Upsizing from up to $4 billion within 24 hours signals strong institutional demand, which is actually a bullish signal on sentiment. So I was wrong. That upsizing is actually signaling more demand, supposedly, which is interesting. So maybe that is why it's ripping today on that upsizing. Either way, if you're just looking at the chart here, whatever's going to happen in the news happens. So if somebody's saying the green seeker, if SPY hits 580, NBIS will 100% hit 60. I mean, yeah, there's no 100% on everything in the market, but yeah, maybe. That's why, you can't trade something like NBIS without a stop loss. So if you're holding NBIS and you're holding to 60, you're doing something wrong, because you got to have a stop way above that if you're trading this. Anyways, let's see what else you guys are looking. Someone's asking about bull, like Webull. I can already tell you my indicator is, yeah, dark red. Looks absolutely horrible. This is a momentum. If anything, you would be shorting based on momentum for Webull. Anyways, RKLB was another one that I'm looking at. By the way, we got 9 minutes until the until Jerome Powell comes out and speaks. And this similar thing here happened on RKLB. This is actually a beautiful little setup right here. I'm not going to lie. They had declining volume all throughout the space. Momentum still relatively strong. Candles are blue. One of my momentum filters is green. Chats is actually really low though, but relative performance is high. So it's like momentum is decently strong, and there's a high volume breakout here, but then the $1 billion offering caused it to give back that entire candle and actually take just right below, probably took out some stop losses just right below whoever, bought this breakout set, a lot of people set stop losses right under the candle. So we'll see if that holds. See if that holds. Yeah, what else? What else are you guys looking at? I don't really look at this one much myself. IREN though, yeah, it hasn't been on my radar recently. What else am I in? PAR and Pump. Some of these energy names are killing it today still as well. We got PARR up here along with Pump, WWD trading above this power earnings gap. HWM, LHX, VRT has been hanging in there really well. Gold, if you guys didn't see gold today, gold broke down pretty good actually gapped down. Look at this gold gap to the downside there, you guys. That's momentum is still decent, but it's not looking good. Risk seems to be coming back into the markets. Let's open my stock market map for a second here and take a look at maybe the change since close. Yeah, semiconductors are actually performing the best today, still along with energy too. Industrials are kind of making a comeback as well. Bonds are surprised. Yeah, bonds are doing whatever. They don't do anything ever. Been holding TLT for way too long. I don't know what I'm doing, but it hasn't really gone anywhere, so it's whatever. But SpySaw added Gamma at 650. Yeah, by the way, speaking of Gamma, what's it called? TrendSpider does have native options data inside of the platform now, so highly recommend you guys check that out. You can use Sidekick to go ahead and analyze the options flow. But in just a little bit, by the way, you guys, I'm going to shut my mouth and let us listen to Jerome Powell speak. But SPY is looking really bad going into close right here. I drew this anchored VWAP starting from the opening candle. And as you can see, along with the 921 EMA cloud on the 5-minute, has been getting rejected all day. So not looking good for the bulls at the moment until we can probably break above this intraday VWAP, although I'm not really a day trader, so take whatever I just said with a grain of salt. Someone's asking about airline plays. I'm pretty sure airlines have already been pretty good. Let me just look at the Jets ETF, which is travel and airlines. They did actually take some here. I haven't looked at these in a while. Could be okay. I mean, airlines are not really my favorite play. But I mean, they could be all right. They'll probably come up when the war ends. That's if, the war ends soon. See, LGCY, somebody said, I have no idea what this is. This one looks pretty nice, though. LGCY just broke out to a new high recently here on the weekly. You can see right there, but all the breakout traders are getting kind of creamed right now. So if you want to trade this one, it looks actually pretty good. I mean, you could try to buy at the bottom of this cloud. Let me see how I would play it personally. What is going on, James? Welcome to the stream, sir. Yeah, I don't know. LGCY, the momentum is looking pretty good. Yeah, SWMR has been insane, hasn't it? Yeah, there's no trade for me in LGCY right now, but it is an interesting one. I might have to keep this on my radar. I don't really know much about it, but momentum seems to be hanging in there pretty good on the chats indicator. It's got blue candles, which means got a momentum filter active, which is good. So yeah, if it breaks below this 921 EMA cloud, though, the trend could flip. We got just 3 minutes until Mr. Powell comes out and speaks, by the way. To prepare for that, I'm actually going to remove my screen real quick and then re-add it with audio. There we go. AMPX. AMPX also looks like a nice trend. Chat's indicator is at 100, which is very good. Breaking out of what seems like a pretty long base. AMPX, very nice revenue growth, insane revenue growth, to be honest. Broke out at around $16. It's at 19. Kind of an interesting first wick here. Let's draw a VWAP. It's not going to do anything. Let's draw it from the swing low. There it goes. Yeah, no, it seems a little bit extended, honestly, but it looks like it's trading very well. Very strong momentum. But let me check on FOMC here. Should be starting any moment now. We got 2 minutes until the FOMC does start, and we're going to be watching Mr. Powell speak together. As my computer, I don't even know if you guys can hear me right now. My computer is throwing up. Sorry, guys. My computer is completely frozen at the moment. All right, I think I'm back. Sorry about that, you guys. I need to upgrade my PC at some point. This thing's been getting slow, but I also have a ton of crap open, so let me go ahead and close this. Close a few things as we come into the FOMC here. Let's open up my 5-minute chart here on SPY. Powell should be coming out just about now.
Achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net, we didn't make progress. And if you look at total core inflation, it's about 3%. And some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind. And the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut from most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs. Going through once and then tariff inflation coming down. We should be seeing that. And the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Howard.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just.
Now, I just realized you guys on X can't see my messages, but hold on, Powell. Basically, you can see the key takeaways right here in the sidekick. Yeah, rates are being held the same, and the SPY is pretty much down to chop right now. It's not selling off like crazy, but it is coming down overall. Just hit a new low of day, as you can see here on the chart. And he's still speaking.
To get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
That consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. And So, and we don't debate how do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid. And inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing, pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increase to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah.
About
so there'll be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully. But of course, that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things. And you worry that that's the kind of thing that can cause trouble for inflation expectations. And so we worry a lot about that. And we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And, I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay, so I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices are the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like that our framework calls on us to balance the risks. And we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Labor non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, we're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, we're a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent would you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may.
SPY is selling off, you guys. So is small caps,
From the
IWM.
predictions or from the comments you've made today about the unemployment rate and focusing on that your view on the labor market story, to a large part being a supply side story, has changed despite the quite negative number in February. Would that be the right take? And was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common? And does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a very much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But, has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But, there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that I had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January, some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question now?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were like discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. You know, when we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal. And we have inflation that's, 1 percentage point above that. So calling that stagflation, it's not, I would reserve the term stagflation for, a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s. And I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course, people will feel that. But I don't want to speculate about what that might mean, because honestly, that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do. But in this case, we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I think the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history. And then they built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision, but the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Chris Rugaber.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value perhaps in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction. And so I just think we do it. And, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way, everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet. And it will take some years of positive, real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed. And, there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or specific answer on the first question. We're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. In terms of diesel prices. So your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, the cost of food and other goods that really rely on it to.
So I think it's a more general concern than that. It's diesel prices because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many, many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but we're right at the beginning of this, and we don't know how big you just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Thank you.
Archie, for the last question.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP and noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity. And by the way, I expect it to continue. And we haven't really started to see the effects of generative AI. And that should certainly contribute to that. So it's quite unusual. And it's, this is the higher productivity is the thing that allows incomes to rise over time. And so it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story. And if you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates?
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really what is the demand growing faster or slower than the supply side. And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
All right. Finally, that's over. That was, I don't know. Let's see what Psychic has to say about that. Overall, the Powell's speech just ended. The FOMC just ended. And we got about 40 minutes until the market does close. And that entire time I was writing notes about everything that Powell was saying and asking Sidekick what it means for the overall market, specifically all of these sectors right here. Of course, energy, gold, the overall market like SPY, small caps, energy, tech, all that good stuff. So initially before the Q&A, it's saying, energy, XLE, and XOP is the clear winner from the statement. And of course, he was talking about near-term energy inflation. It says gold is holding up, but today gold actually kind of gapped down. Maybe that will change. Let's actually take a look and see if gold reversed at all. GLD, not really. It's still trading in that gap down. XLP, a bit surprising, is getting absolutely destroyed today, which is consumer staples, which is a risk-off sector. And if we look at like XLY, which is pretty much the opposite, it's also getting destroyed. XOP has been flying today. This is specifically the not energy, but oil and gas ETF. Let's take a look at XLE again, though. XLE has done okay today. It's hanging in there, but XOP is the clear winner there. So what changed? It's saying this is no longer a clean, patient hold. Powell introduced several more uncomfortable themes. The possibility of a hike did come up. Not at all certain tariffs will be one time regarding inflation, I believe. MU earnings is in 41 minutes late. And then, all right, here's what else Powell was saying. He actually, interesting enough, was saying that generative AI, just AI in general, as a productivity driver is not really driving productivity. Not sure why Powell was speaking on that too much. And he was really hyping it up last time as it was, with all that CapEx spending, was saying that all the money's basically going into AI. And this time he was saying AI is not a productivity driver, but productivity is up, which is weird to me. That is interesting. And he's also saying it's frustrating that non-housing services inflation hasn't come down, and Sidekick is saying that is the stickiest part of core CPI. Oh yeah, he also said, if I don't see inflation progress, you won't see a rate cut. So basically, keep an eye on inflation. PPI did come in pretty hot today. Last week, we did see PCE and CPI come in pretty much as expected, though. But the PPI did come in hot today, which is an inflation metric. And he even said, the possibility of a hike did come up. So I think really, people have been saying, either rate cuts or stay the same. Now it's leaning more towards, he wasn't saying they're going to hike rates. He just said the conversation came up. So it's like not out of the question, essentially. Here's the bottom line. Powell's Q&A introduced asymmetric uncertainty. The bar for cuts is higher than the statement implied. A hike is now at least a discussed possibility. Tariff inflation may not be transitory, and the market is repricing accordingly. Energy, of course, is doing great today. Gold is weak, what I was saying. Semis is taking the hardest hit. Let's take a look at semis today. Of course, we have Micron earnings coming up right now, but semis are down a little bit. Micron's hanging in there pretty damn good still, though. Oh, he also said, yeah, this is definitely not stagflation. Where does it? I know I put some notes about that in there. Stagflation denial is actually a flag. When Powell says this is not stagflation, markets here, people are worried about stagflation. That's an interesting take. Yeah, people obviously have been worried about stagflation for a while now, which is essentially stagflation is high unemployment and high inflation simultaneously, which is essentially what's for the most part going on. Inflation isn't crazy high right now. Double check the last employment rate reading. But what are you guys thinking? Let me know what you guys are thinking based on all this. Yeah, unemployment's at what, like 4.4%? Small tick up in February. I think we should be getting unemployment sooner than later as well. Yeah, let us know in the chat, or let me know in the chat what you guys are seeing over across the market. SPY has essentially been selling off all day. It continues to go ahead and do so. The put to call ratio is very bearish at 2.68 on our new custom indicator. But yeah, you guys, we are about to come up to Micron earnings in 40 minutes or so. So be prepared for that. We'll take actually a look into Micron a little bit more. Let me grab a Sidekick prompt that we can use to analyze Micron. By the way, if you guys haven't already, be sure to sign up for TrendSpider's free market newsletter. Will be very useful specifically for this week because there's so much going on with FOMC, Micron earnings. So definitely subscribe using the link down below in the YouTube description and chat to the free market newsletter. You definitely do not want to miss this week's based on all the stuff that's going on right now. And getting together a prompt to analyze Micron. And we're going to see what Sidekick has to say going into earnings today. Is it the 18th today? By the way, if you guys are on YouTube or X, make sure you follow and subscribe, whichever one you're on, because we will be going live again tomorrow. I think, yeah, FedEx reports earnings tomorrow. We'll be covering it live, but sent in a nice little Sidekick prompt right there to analyze Micron coming up into earnings here. What is the PCR for Micron? Put call ratio 0.29. We can actually take a look at that in just a second here. Hits Hearth 0.29. That's, yeah, it's crazy, but look how damn high it is trending. Mike A says, I personally think risk to unemployment is more than inflation. He was getting harassed by left-wing media for not raising rates to spite Trump. Yeah, no, the political BS going on between Trump and Powell is pretty damn annoying. That's all I'll have to say about that. Yeah. Yeah, because Powell was saying, I think what you're referring to, that the risk, I think it was Powell saying the risk of inflation was higher than the risk of unemployment. And basically, that's, yeah, like you said, in spite of Trump or whatever, but yeah, it's whatever. So here is what we're expecting on Micron. We're expecting an 8.6 EPS and a revenue estimate of about 19.2 billion. Let's see what their last reports were. So last quarter revenue was 13.64 billion. We're expected to see 19 billion. Holy moly. That's a $6 billion increase. Are you kidding me? And then 8.77 EPS, and last quarter was 4.78. I'm not even sure. Is this right? That's freaking insane. Yeah, it is right. Look how massive these expectations are. Insane. Sentiment obviously overwhelmingly bullish going in. I'm going to say and we're going to take a look at the put call ratio. Say just the options chain for MU, and the put call ratio indicator I have on my chart is saying the PCR is 0.29 or 28 or whatever. What do you think? How does options positioning look going into earnings? And also give out some potential options strategy ideas going into earnings. So I'm actually asking Sidekick, since we have full options chain data now, you guys, you can actually analyze the entire options chain with Sidekick, which is honestly incredible. We also have the options map right here. Let me just get open the chain real quick. So this is the 2DTE, the March 26th expiration. And this is the chain for it. And we can look at, I like to use option delta. So expected move based on option delta is around 425 to 422-ish. Let's see what that says in here. Yeah, that's about right. 428 on our expected move from options indicator. So 428, about an 18 delta that it's using. Interesting. And then down here, 18 delta is about 512 to the upside. What does this say? 502 is the expected move from options on the custom indicator that we released. Light is asking, is it too risky to hold MU into earnings? I mean, it completely depends on your strategy, of course. You know, I am not personally going to, I'm not in at all right now, but I technically should be in right now based on my strategy, but I'm waiting till after earnings personally for whatever that is worth. Probably means that it's going up, so maybe you should hold. I don't know. But yeah, obviously the PCR of 28.28 means for every put, there are 3.5 calls, which obviously aggressive call side positioning, probably people hedging their bets to the upside. Maybe they're short positions, who knows? And here are some key option strikes. We got a lot of calls at 430. Looks like the 430 has the highest OI, along with 500 is up there as well. Says yeah, like I just said, 430, 500, the two largest call OI strikes. 400 is the primary put wall. So 400, I mean, it's just, yeah, makes sense. And here's some strategy ideas from Sidekick using options going into earnings for Micron. Let's see, aggressively bullish positioning. But what did it say? We got a bull call spread, a bear put spread, a short strangle, and a calendar spread. Interesting. So it's not really picking a side here, but it gave you options for pretty much everything. If you're, neutral, or if you want to go bullish or bearish, it is saying bull call spreads. And then a bear put spread, buying the 450, selling the 420. It's a 30 wide. Targets the put wall at 420 is interesting. And short strangle, selling the 430, selling the 500 for the March 20th. Buy wings for protection, which is an iron condor. But of course, there is high risk if there's a major gap above or below 430 and 500. And calendar spread, sell the March 20 at the money call, buy the March 27 at the money call, which is going for a front month IV crush, since the IV on the earnings expiration will be higher. You can benefit from that crush and then not lose as much on the back month, which is the March 27th, the week after. Says the crowded positioning means a sell the news reaction is a real risk if guidance disappoints even slightly. The 430 level is the key support floor in options land, and 500 is the bull target. So look at 430 and 500 is basically what I'm getting out of Sidekick right here. 430 and 500. This is very cool, which is basically the expected move. So I'm just going to draw this at 430. And then we're going to clone this at 500. That really is you can just use the expected move indicator. Almost gives you the same exact levels right there perfectly, all built into the platform. By the way, TrendSpider is on sale right now if you guys are interested in checking the platform out. For St. Patrick's Day, I believe you can save up to 38% right now. I will show you guys the offer. But yeah, I'll show you right here. You can save up to 38% off on TrendSpider. It is the platform that I've been using this entire time to analyze the markets with AI, including options data, which is now available for you to purchase at $9 a month for extra options data if you are into options. So very, very good deal if you guys want to test the platform out. Thanks to St. Patrick's Day. Yeah, guys, those are the key levels here. And Sidekick was saying, what was that? Sidekick keeps raising a sell the news risk if guidance even meets expectation and doesn't beat. So Sidekick is basically saying watch guidance very closely. But we're going to get a stock move way before the guidance comes out. And yeah, it's coming out in 27 minutes. It's supposed to come out 1 minute after the bell rings. So if you guys are out there and you guys are excited, I know I'm pretty excited for this. Let me know down in the chat below what else you guys are watching. You can take a look at my live dashboard over here. Let's check out the sector rotation map, why don't we? And go to weekly so we can get, the market's changing so damn fast these days, you might as well use the weekly time frame. And it looks like we're getting SMH back to leading over the last 5 weeks, along with energy continues to kill it. What else is slipping in here? We got industrials coming back in. And yeah, XLRE. So we got industrials, energy, semiconductors, and real estate. All the ones leading, and lagging is actually healthcare now, interesting enough. Financials is lagging as well. And consumer staples is also went from leading down to weakening. I'm reading this chart right here, by the way. If you guys have any questions about it, do let me know. Similar to the stock market map over here. Interesting enough, too, gold or silver is getting crushed over the last 7 days relative to gold. Silver is down almost 12% over the last 7 days, calendar days, that is, and gold is only down 6%. So silver's taking a lot more heat than gold, but they're both coming down, of course. And utilities and energy are killing it. And yeah, that's really it there. You can take a look and see how these earnings stocks are looking going into close here. Is there any names? Yeah, it looks like RCAT is up pretty good heading into earnings. DLO, I don't know what that is, to be honest. 5 below, and Micron. Micron is honestly pretty flat on the day. It's definitely the calm before the storm there on Micron, isn't it? But yeah, overall markets definitely selling off, as you can see on the SPY and QQQ right here on my charts. Nasty red cloud on the 5-minute all day long. So index bros are not in the lead for now. It has definitely been a stock pickers market still. There is some great, I mean, obviously Micron has been killing it lately. What else has been? NBIS, I think, is back up on the day. We were talking about that one earlier. Looking good still. RKLB is something on my radar. Oof, it's really breaking down below this this level, though, so I don't know. That one is not looking super great. CIEN was another one on my radar personally. Coming down, I might just go ahead and wait. SPY's under the 100-day SMA. That's my filter for not buying anything. And DigitalOcean is another crazy runner lately that I have been watching. But honestly, I'm going to wait to see what happens for Micron earnings. I'm not going to rush into anything in this market myself. I already have my positions, some positions in. I'm not super eager to get slapped down by this market. And maybe a little rip, and I won't be fully allocated, but it is what it is. What else are you guys watching out there? I've covered a lot today. Curious what else you guys are seeing, if anything, out there in the chat. So let me know. Also, be sure to like this video and subscribe if you haven't already. If you're excited for Micron earnings, they are, again, coming out in just 20 minutes. So be prepared. Circle. Yeah, Circle's a good one. Let's take a gander at Circle here. Circle has been absolutely flying. Let me take a look on my indicator over here as well. Go back to my platform. Yeah, Circle is interesting to on my filters personally, which doesn't matter to a lot of people probably. The momentum is still down, but overall it does. I mean, the trend is definitely starting. The trend is definitely starting here. It's just very much a new company, and not a lot of data to go off of, but I think it's probably at least a good long-term investment opportunity. Somebody saying buy order at 373 overnight on MU. Have my options indicators on here, by the way. There we go. Expected move. And I'm going to put that one on too, actually. Get rid of that. Get my put to call ratio indicator added here. Look at this, guys. I've been comparing my indicator to the Shondi indicators. They line up pretty closely on it for the most part. You see this breakout label line up pretty closely to the Donchian channel breakout. Same with recently right there. And yeah, pretty close stop losses too. And same with right here, almost exactly. Kind of fun to see. Let's see how SanDisk is doing today. Didn't get a signal on SanDisk, only because on my indicator there's a volume filter. And since the relative volume wasn't above the 20-day average on this pivot breakout here, I didn't get a signal, which is fine. Micron had one. I was talking to Shondi about, WDC got one yesterday as well. That is cool. Seagate has been lagging. Yeah, nothing on Seagate. Seagate's for sure the lagger there. Why is SanDisk up 5% when MU is only up 1%? I would say because one, SanDisk is a higher beta name. It's a smaller name for one. And then for two, Micron is probably just getting heavily traded coming into earnings today. And I don't think people are as eager to hop in a trade on Micron as they would be from something like SanDisk, which doesn't have the earnings risk today. I think it's really just the earnings risk for that is what I would say myself. But yeah, you guys, Micron going into earnings. I can't wait for this. I mean, I don't care what happens. I'm not even in. I'm going to be pissed if it rips because I should be in. But it'll also be kind of cool if it rips down to like back to this anchored VWAP, this all-time high anchored VWAP, and we get another buy opportunity at a lower price, maybe around, you know, under 430 would be sick. Maybe at the expected move to the downside. Yeah, right there around 430 is my ideal conclusion here. Not that I'm betting against Micron. I would love to see it rip, but I would also love to see a good entry point. WEC, keep an eye on this one as well. Also could see a pullback to that all-time high anchored VWAP. Let's anchor a VWAP down to the swing low, pretty much the same level there. So it's going to be very crucial to go ahead and hold. Yeah, Micron has the recent swing low anchored VWAP right around 425, and then we got the all-time high one at 412. So, you know, right at that expected move would be, in my opinion, a good way to buy weakness on overall momentum strength. And if you guys didn't know, on TrendSpider, you can, you know, use your custom indicators in automated strategies. For example, I have this one built out using my own personal indicator. I set up entries and then a trailing stop exit right there. And it has done pretty well on Micron the last two, and it just hit a third one. Generally, when it hits a third one, it's probably maybe extended. Obviously, that's not a guarantee, but could still have another leg up. WDC hasn't been as good if we take a look here. Well, it actually has still been pretty solid, though. Did miss this whole leg up, which sucks, but had two profitable trades, and now should actually have, yeah, tomorrow it'll show an entry there. What else do we got? SanDisk, actually, beautiful, beautiful trade on SanDisk. Actually took this one, 100%, 98% winner on SanDisk there. That was a beautiful one. VICR, I made some decent trades on it. And this is all just using the strategy tester, you guys, in TrendSpider. You can see exactly how your custom indicator can perform over time on any asset here. It's very easy to go ahead and build. And it shows all your entries and exits directly on the chart right there. PAR is looking very good. PARR, if you guys didn't know this one, this is an energy name that I've been in since I don't remember when, somewhere around here though. And it's currently ripping on the day up 4%. So is Pump, PUMP, another great play that you could have been in, or I should have been in since January, but I didn't take it to like closer over here. The second signal. NBIS is back up, 2% today. We took a look at this one again earlier. Stop is nearly at break even there, and it seems to be in there all right. Worst case on this one, could just take a break even loss at this point unless it gaps down or something. How's Ross doing? I've been in this one for a while, just pretty boring. Gold, yeah, gold is looking kind of brutal these days. It broke through these anchored VWAPs right here, the swing high and swing low. And so I guess the next line of support will be this pivot level around 418, which is actually where I got in, or I think I got in later, but yeah, what else are you guys watching out there? We got 14 minutes till Micron earnings do come in. Healthcare has been taking some heat. GMed and Regeneron. I haven't really looked at these in a while. Regeneron's actually hanging in there pretty good. GMed is down a bit. Let's see. Just watching some Spider. Let's take a look at SPY. Oh boy. SPY looks like dog water right now. 2.79 put to call ratio there on SPY. Incredibly bullish or bearish. Let's check out SMH, which is the semiconductors, also selling off on the day. It looks like SPY selling off harder though, to be honest. SWMR, crazy IPO runner here. Looks like it's starting to slow down there on the 5-minute. FSLY is absolutely, that is beautiful. Something beautiful, just a beautiful uptrend riding the cloud or your trailing stop all the way up. Yeah, this is exactly the stuff you want to just buy and hold and just sell when the trend breaks. Net killer as well. SNDK. RCAT also has earnings today. Let's take a look at RCAT on the daily chart here. Pretty wild day. I don't know much about RCAT, but the trend intraday is starting to break going into earnings. Again, it's another beautiful uptrend that you could have ridden up. Let's see what else we got here. Firm, Nail, CING, Upstart. Totally forgot about this company, Upstart. Yeah, makes sense why it looks terrible. How is the like OKLO doing these days? Not very good, is it? No, not OKLO. I was talking about OKTA, Okta. Cybersecurity names. Anybody in cybersecurity out there? Any cybersecurity stocks? Okta has not been doing that good. CrowdStrike. This actually came up a little bit. Not looking too bad. How is like Adobe doing? Oof, man, Adobe still in the clapper. Oracle looks like crap still as well, but you know, I did fill that gap to the downside. Maybe it'll try to bottom out there. Figma still looks like trash. Duolingo. Yeah, I'm just pulling stuff up, you guys, at this point. Microsoft. Oh, Microsoft looks pretty disgusting still. I almost forget about some of these names, like yeah, they're the Mag 7, but if they're not, you know, trending, then they're just not on my radar. Like I have some Microsoft in my long-term account, but like recently, like who, like, yeah, you can just DCA into this, but I mean, it's not my. Yeah, maybe I will buy some more Microsoft for the long-term account, just hold it. But as far as like trading goes, like there's just nothing to do in the Mag 7 recently. And I think that's why a lot of traders are just not quiet right now, but like Twitter has been down. There's not a ton of trading activity around just because all the like the popular stocks are just not going anywhere. Which is unfortunate if you don't have a strategy put in place here on the TrendSpider platform to find names like you know, that are still trending. So many different scans that you guys can go ahead and run here. For example, let me actually go to my platform. Run some of my momentum scans. MU open. We got 10 minutes until the market closes, by the way. Just going to run this momentum scan through, like, I don't know, the NMS composite, see what happens. Yeah, someone says, I believe investment says you have to be an option seller or day trader here, and most suck at that. Yeah, day trading, yeah, that's cool. I don't really do that. I mean, there's tons of opportunity for swing traders still. I mean, just look at Micron and just, I guess not as like recently it's starting to break out again, but there's still been tons of opportunity just outside of the Mag 7, really. Brian Pike says, nah, Microsoft value is as legacy unless you are trading it on chop and swings. What do you mean by that, Brian? Let's see what we got in this little APA is a good one. I mean, look at this. I just ran a scanner. Look at all these beautiful trends. I mean, how are you just going to sit there and just only look at the Mag 7 with all this stuff? All this stuff. We got FSLI ripping. Like, you even just caught one of these and you just like, I mean, you lose like half your trades, whatever, but you catch some of these trends, you just ride them. VIAV is an interesting one. I think I got stopped out of that one there. LASR still riding. I mean, beautiful trends across the board. Like, there's no shortage of opportunities even in this market, you guys. LINC, like, this is the first time I even seeing this one. LINC, STTK. Let's go scan through the NYSE composite. And this scanner run is momentum scan. Like I said, it's scanning for stocks that have a CHATS rating above 90, relative performance above 90, and then also a recent pivot breakout on my own custom indicator that I use. CIEN is a big one that I've been watching. I actually just had another pivot breakout yesterday. I believe investment says, enjoy the TrendSpider tools. Yeah, same. And a lot of swings have low liquidity and or wide spreads on options. Yeah, you just trade the equity. I mean, for the most part, equity is pretty liquid. Options are a whole different story, that's for sure. TTE, interesting. Absolutely, Brian Pike. Build bots on individual equities, sure. Small, highly repeatable setups, low volume, high certainty trades, automated. There you go. Sounds cool to me. SU. I mean, just look at this. And you're looking at all these beautiful charts and you're just going to buy fucking like Netflix. I don't know. I just picked a random Mag 7. I don't even know that's Mag 7 or like Meta. I don't know. I just see zero opportunity here. It's just going absolutely nowhere. DLO, energy name, ripping. I mean, this one has been trending since like 6 months ago. And the only way I'm finding all this stuff, you guys, is the TrendSpider stock scanner. Again, I highly recommend you guys check out TrendSpider. Is on sale. Or at least just tune in to these streams. Follow us on X, subscribe on YouTube, and tune in and see what's going on every day, every week. VIST, I mean, man, they're everywhere. You can scan through 5,000 stocks at a single, like 3,000 and 2,000 stocks at once. Kava, I've been hearing a lot about. Recently had a pivot breakout. And it's honestly looking pretty good there. Kava, CAVA. That one looks great, actually. I'm going to have to add that to my short list. PBF, is this, an energy company? TS. Just had a pivot breakout yesterday. VRT, I think I'm still in, until this trailing stop triggers my alert. But yeah, let's get back to Micron, I guess. Expected move from Micron, I can tell you that right now. Because Alan Tran, by the way, if you haven't heard, TrendSpider has options data now, and we also have an expected move from options indicator, which you can see right here. I actually used Sidekick just a second ago to find out the best option strategies for Micron. And it's saying, bottom line, 430 level is the key support floor in the options land, and 500 is the bull target that the market is gunning for. So 430 and 500 are the levels that you want to go ahead and watch. And I plotted them right here on my chart for us. So we'll see. That is the targets. That leaves us with 7% upside and 7% downside, actually. So honestly, not the biggest move, 7% on Micron, considering this thing is up like 10 bajillion percent. Of course, Alan Tran. Of 194% since the breakout from the pivot from in September. Essentially 178% in 6 months. I mean, look at this chart, you guys. This is the monthly chart of Micron. Like, how the hell do you just predict that? I can't wait. We got 4 minutes until we see this thing start flying around. It'd be a lot funnier if I was in. Maybe I'll buy one share just to have some sort of feeling. I mean, it won't make me feel anything at all realistically, but yeah, screw it. I'll just wait. RCAT selling off. Micron is not going anywhere intraday, you guys. It's just completely waiting. It did gap up overnight, which is cool, but gave it all back during the day for the most part. We're trading pretty much flat on the day. Getting a pretty nasty sell-off going into close. Look at the sell-off on Micron going into close right now. For anyone just joined in, welcome to the stream. Micron is about to report earnings in 3 minutes. I am hyped. I hope you guys are too. Let me know who's just tuning in and where you're tuning in from. And if you're excited, who's out there is playing Micron earnings, you guys. Hell yeah, Alan Tran 4 of SPY put. Banger day. Guys, let me know who is trading Micron earnings in the chat. You're from Phoenix, David. Welcome. Welcome from Arizona. Let me know where everyone else is watching from and who is trading Micron. We got Micron at the top left chart over here. Of course, are my levels? Yeah, my levels are right there. 430 and 500. Sidekick found those levels for us based on options pricing for the expected move. What is going on, David? 100 shares of Micron at 465. Woo! Yeah, it's going to be a fun one. Well, we got 2 minutes. The earnings are supposed to drop 1 minute after the bell rings. Oh boy, oh boy, oh boy. Market is closing any second now. I'm going to flip this one to the 1 minute chart. Look at that dirty 1 minute downtrend. RCAT is just selling off with probably the rest of the market. Micron is selling off. The market is about to close any second now. Somebody rock the mic. 450 and 550. Call spread. Looks like a bull call spread. Nice. Whew. Look at what is going on Micron, guys. Dirty sell-off going into close. The market just closed. It just struck 1 p.m. Pacific Standard Time. Oh, actually, apparently it didn't. I guess is my clock wrong? There it goes. It's time. It's time. Let us know in the chat what you guys are thinking is going to happen here. We got less than 1 minute before we see, hopefully, a sick move to the upside. I'm voting for the upside. Screw it. I mean, I'd love to see a better buy opportunity potentially, but honestly, an upside move would be awesome. Let me know what you guys are thinking is going to happen in the chat below. Whew. We're getting some 1 minute movement We're getting some 1 minute movement here. Numbers are probably out. Micron is up 2% right now, but don't get too excited yet. It's at the top left chart right over here. Don't get too excited yet. This is a 1 minute chart, but so far, so good, everybody. So far, so good, up 3%. 5 is up 3% as well. Just shot up right there. Oof. I'm not sure if the numbers came in yet. Let me click refresh there. Still waiting for numbers to come in. Micron coming back down from that 3% gain. Now only up 1% in the after hours session. When should you sell? You should have thought about that way before you played it before earnings. I'm selling at $10 question mark. I don't know. What are you selling at? Oh, Micron. Oh my God. They just fucking destroyed earnings. Micron EPS came in at 12.2 and beating the 9.21 estimate. Sales came in at 23.86 billion, beating the 19.93 estimate. Holy crap. That was a banger, absolute banger EPS drop. Beat it by $3 per share, but we're going to have to see what the forward guidance is, because that everyone was expecting a massive beat. Clearly, as the market is pretty much pricing in. Oh yeah, I thought that was a new one. Still waiting for forward guidance news to come out. Maybe we'll only get it in the earnings call. I am not sure, but holy moly, that was a beautiful, beautiful move up there on Micron. Well, not really move up. Oh, here we go. Oh, Five Below. EPS beat, sales beat. So if you care about Five Below for whatever reason, you got a double beat. Congratulations. That is up 4% in the after hour session. Hell yeah, love it. DLO up 2%. Still waiting for Micron forward guidance to come out. I'm not seeing any yet, but we might get some. Yeah, Krishna, freaking monster beat on Micron. I love to see that. For everyone just joining in, welcome to the stream. If you're enjoying this so far, make sure you hit subscribe and like the video. We are using the TrendSpider platform to do all of this analysis and see these things come out in real time. Micron just absolutely smashed earnings. EPS came in at 12.2, beating 9.21. That's a $3 EPS beat per share, and then $23.86 billion revenue, beating the $19 billion estimate, which I don't think you guys know how insane that is, considering Micron's last earnings report. Let me show you. Micron last earnings, they reported $13 billion in revenue, and they were expected to report, what was it, $19 billion, and they reported $23 billion. They nearly doubled their revenue in one quarter. Basically doubled. Well, I mean, MU is not even really up that much in the after hours session, just a bit. Probably waiting for more forward guidance to come out. Oh my. Micron increases quarterly dividend to 15 cents a share as well. Micron in the quarter with cash. Nice. So an increase, and I didn't even know they paid a dividend. I don't even give a shit about dividends, but nice. That's a good sign. It looks like for the second quarter of 2026, investments in CapEx net were $5 billion and adjusted free cash flow was $6.9 billion. Micron ended the quarter with cash, marketable investments, and it's just a headline. And of course, it's selling off, you guys. Well, it's basically flat since the market is closed. But holy moly, you couldn't really have asked for a better report than that, you guys. You really cannot. I'm going to keep refreshing this news feed to see if we get any. Oh, here's some more news. Micron sees Q3 adjusted EPS 1875 to 1955. Bro, they just destroyed forward guidance, like fucking destroyed forward guidance, you guys. They're projecting 18, basically 19 EPS for Q3 versus 11. And then they're expecting to do $33 billion versus $23 billion for next quarter alone. Guys, this is one of the best reports I've honestly ever seen. Who out there is 200% year-over-year increase in revenue? That's a 24% beat on analyst expectations. 682% EPS growth year-over-year and a 42% beat. Holy shit. RCAT, yeah, here. And of course, on this insane beat, Micron is down. Micron is completely flat. Honestly, flat is fine. Flat is fine. RCAT, not sure about the margins. You know what I'm going to do, though? I'm going to ask Sidekick to go ahead and analyze Micron for us, since we have all of this data in the system now, or at least in the news feed and the system, actually. Holy crap, guys. I mean, yeah, sell the news. That's what Sidekick was literally warning us about, you guys. I mean, we'll see what Sidekick has to say going in now, but it was saying sell the news risk if guidance merely meets, not beats expectations. But you guys, forward guidance was absolutely insane. Yeah, I mean, sell the news for sure. Sell the news for sure. I mean, fucking hey, that is insane. Year over year, the EPS beat by 682%, you guys. This is just absolutely insane. Let's see. I mean, obviously, Sidekick is going to have to give a buy on that. I mean, how the hell could you not, right? But guys, look at this. EPS beat. Here we go. Reported 12.2. Estimate is 8.21. 682% year-over-year beat. 194% year-over-year beat on revenue. You can see it right here. This is the, what is it? This is the estimate, and that was what was reported for EPS. And then revenue, this is what was reported, and this was prior quarter or estimate. Key news. Let's look at the forward guidance, though. Here we go. 60 to 67% above forward guidance on EPS and 40% above on revenue. Dividend raised to 15 cents a share. Adjusted free cash flow is $6.9 billion this quarter alone. Holy crap. Glad you enjoyed it, I Believe Investments. That was a beautiful, beautiful earnings. Bear case. Here's the bull case and the bear case. Obviously, we all know the bull case. I mean, they just absolutely fucking demolished earnings. But the bear case is the $20 billion CapEx plan in fiscal year 2026. Heavy spend could weigh on free cash flow. Tariff risk explicitly excluded from guidance, which is a wild card, I guess. Screw the options holders. Just kidding. At current pace, expectations will reset extremely high. Any macro shock is painful. That is very true. I mean, expectations are insanely high. I mean, it's like an NVIDIA situation, but it's still given a buy. The numbers speak for themselves. A 32% EPS beat, $4 billion revenue beat, and Q3 guidance way higher than expected is not a hold situation. The super cycle is clearly accelerating faster than ever, even though the most bullish models anticipated. Risk is macro/tariff disruption, but the fundamental trajectory is exceptional. CEO selling off, Alan Tran. What is he talking about? Let me refresh my news widget. This is all done using the TrendSpider platform, you guys. By the way, if you guys want to see a full recap of everything going on in the market this week, which I highly recommend you do with everything going on, you can sign up for the free weekly newsletter using the first link in the YouTube description below, and in the YouTube chat, I just dropped the link as well. Also, make sure that you subscribe to this channel and follow us on X if you are on X for more live streams like this and just some banger content all around across all socials. Tony Mod says, memory stocks are turning into meme stocks. I mean, you're not wrong. You are not wrong, sir. Somebody said, why Micron down? It is not down. It is actually flat. And Alan Tran, you're going to have to expand on CEO selling off because I'm not seeing anything regarding that. We're getting some more news here. Micron Technology expects construction-related CapEx to increase by over $10 billion year over year in 2027 fiscal year. Expect DRAM and NAND industry bit demand in 2026 to be constrained by supply. Everyone knows that supply-demand conditions to remain tight beyond 2026. Expect higher equipment spend year over year. Expect CapEx to be above $25 billion. So they're saying they're going to be spending a lot in CapEx, which the market is not necessarily like that much right now. But yeah, they're absolutely killing it. The earnings Kang Tran, the earnings are out, man. The earnings just absolutely demolished. If you mean the earnings call, I can take a look to see when the earnings call starts. Not even seeing where an earnings call is. See a press release. Here we go. Oh yeah, 4:30 Eastern Standard Time. So the call does start in 16 minutes, you guys. Let me know what you guys are thinking in the chat of what is going on in your head regarding this absolutely insane Micron earnings beat. You're pissed. Why are you pissed? Because the stock's not moving up as much as you wanted it to? I mean, this is the chart. I mean, it's sitting basically at all-time highs, you guys. It's looking pretty damn good if you ask me. They just had a killer report. The only downside of this report is all the CapEx spending, but we didn't get a move anywhere close to the expected range, to be honest. Well, that expected move is for Friday, so maybe we'll see it sometime later in the week. It is basically flat. Option sellers indeed win again, but we'll see what happens when the call does start. The call starts in 15 minutes. I will send you guys the link to that if you want to watch it in just a second here, but yeah, I mean, crazy report here on Micron. We'll go back to the 5-minute chart so we can see everything going on in real time. But really, it's not going anywhere, you guys. I'm not going to lie. It is dead flat. Whoever said option sellers are winning is absolutely true. Kemp Sun or whatever, Kempo Sun, you are way behind because Powell stopped speaking probably about an hour ago. Yeah, Kemp Sun, if maybe you rewound. You can rewind this stream, actually, if you want to hear Powell speak. We did stream that. I've been live for the past couple of hours for you guys. So if you guys are out there and it's your first time here, let me know down in the chat what brought you here, and also subscribe, because I've been live for several hours now, and I would love to see you guys on future live streams as well. Somebody's saying 470 level, key level to pass. Yeah, I guess so. I mean, they got above that already. But I'm seeing, based on options positioning, 500 to 430 is the relative, expected move until for Friday. Is it Thursday already? What is it today? God, it's only Wednesday, isn't it? Yeah, it's Wednesday. Yeah, RCAT did report today as well. Scroll down here. RCAT is down like 1% in the after-hours session. Nothing crazy there at all. But RCAT misses EPS and beat revenue. Yeah, if you guys have any other questions before the earnings call does go ahead and start, please do just let me know in the chat. Again, if you guys want to follow along with everything I'm doing here on the TrendSpider platform, it is on sale right now. I'll show you guys the offer again. Basically, if you just go to TrendSpider.com, you can save up to 38% today, thanks to our St. Patrick's Day sale. So if you guys do want to save pretty big on TrendSpider, now would be a good time to do it. Sale ends in 2 days, as you can see right there. So make sure to take advantage of this. It's literally the same price as TradingView right now, but it's such a better tool, you guys. We have so much. We actually have AI features that I've been using the entire time. And yeah, make sure to check it out. Guidance will be, let's see. A lot of people here for RCAT, interesting enough. I can go send a AI prompt in to analyze the RCAT news for us, or earnings. But Micron, as I'm sure everybody knows by now, absolutely killed it. But let's see what's going on with RCAT. So this is TrendSpider's Sidekick AI for those of you that have never seen it before, that are just tuning in. It is an AI that has access to all of the market's data, including options data, unusual options data, earnings called transcripts, fundamentals, and everything here. And it's going to do a full analysis of RCAT for all of you guys out there that are wondering. And just give it a second here. It's also fetching analyst ratings, which is pretty cool as well. Typed MU earnings and found you. Absolutely. Sounds about right. And now we're taking a look at RCAT, since we already looked at Micron. But yeah, if you just found me randomly today, make sure you subscribe and tune back in. Let's see here. So this is RCAT. Again, we see the reported EPS came in worse than expected, which is not good. And then revenue came in higher than expected. They beat revenue by $3 million or so, 2.6 million, 2.3 million. Forward guidance was not given. And yeah, Sidekick rates it a hold. EPS missed, lack of guidance, and the fact that the stock has already run hard on geopolitical sentiment makes chasing here risky. So this is what Sidekick has to say about RCAT. Again, they are a U.S. defense drone company, and they missed on EPS and beat revenue. So that is RCAT. Lolo trades. Yeah, I stream live all the time. I mostly don't even place trades during the market day. I send my orders in after the market closes because I run daily strategies, but I am here live analyzing the markets as they're open all the time. So make sure you subscribe and tune back in. Yep, and we got 9 or 10 minutes or so until the earnings call from Micron, which might provide even more forward guidance. RCAT, I'm not sure when that earnings call starts, but most people, I think, let's see. Yeah, here's a new headline from Micron. Adam Eckert, Micron blows past quarter 2 estimates, expects significant records again in quarter 3, of course. Absolutely insane. Lolo trades. Yeah, I mostly personally trade stocks. Sometimes I'll trade options. Futures, I haven't really got into a ton. Yeah, you're welcome. Micron is slightly red. Trying to check on 5 earnings. Yeah, sure. Let me just use Sidekick to go ahead and do that for us. FIVE. 5 is actually the real big earnings winner today from at least a price action standpoint because they're up 5.43%. So is DLO. DLO's up almost 10%. These are the earnings moves for 4 main stocks that reported earnings today, of course. And yeah, we're using Sidekick AI to go ahead and analyze the 5 earnings that just, of course, released today. Sidekick is building some beautiful charts for us right now. 5 Below is a retailer sending trend right products, toys, candy, games, beauty, decor, largely at $5 and below. It's kind of like a dollar store, except if everything was $5, targeting kids and teens and whatnot. EPS came in pretty good. 4.31, as you can see here on the beautiful chart it made, versus $4, and then 1.73 billion in revenue versus 1.7 billion. So double beat there. 23% year over year and 24% year over year on growth for EPS and revenue. Forward guidance here came in 73% above expectations for quarter 1, and then 8% beat on quarter 1 revenue. So yeah, honestly, just overall, great report, good forward guidance, and that earned a buy rating from Sidekick. So yeah, 5, pretty good. Check it out on the weekly chart. Yeah, it's a beautiful trend, honestly. Look at this weekly trend, just riding that cloud up. Thoughts on gold and silver getting destroyed? Yeah, it's an interesting one, isn't it? I think the money's just flowing out of there into energy right now is my smooth brain take. Because XOP oil is just the commodity to be in right now. XOP is ripping. See oil prices, oil futures ripping. And gold and silver just coming down. So I guess the metal train is just over for the time being. And the train now is into pump. Send pump to the moon. The oil names PAR as well. Look at PARR, absolutely beautiful. SNDK, I don't think anything is happening at SNDK. Let's take a gander though. SNDK coming down a little bit in the after hours session. Nothing crazy. Let's take a look at WDC also. WDC, not much. Micron also, yeah, Micron's actually down relatively well in the after hours session. Actually, it's down 1.4%, not a lot. But the earnings call does start in 5 minutes, you guys. So before you guys head off and check out the earnings call, make sure you guys subscribe and like the video if it's your first time here. Would love to see you back tomorrow. We'll be live again tomorrow for the FedEx earnings, which has been a pretty nice mover lately. So that one should be fun to watch. Our memory stocks down of beat EPS because that's what the market does. That's just what the market does. Like, it's a sell the news event, you could say. And honestly, I'm kind of grinning right now because maybe we'll get a better buying opportunity here. Yeah, a lot of people are interested in RCAT. I mean, it's up 2.2%, nothing wild, but it's looking pretty cool. Yeah, it is pretty crazy. Micron down 3% on that insane beat, isn't it? But DLO is actually the biggest winner along with Five Below. You guys will be all right if you're in Micron. Just make sure you have your risk management set in place, and that's about it. If you're in calls, though, it might be kind of brutal. Not going to lie. That's why equity is kind of king. Micron is dropping just a bit. I mean, it's coming back up. It's down 2%, you guys. The expected move was 7%. We're not moving that much realistically. But maybe it'll continue into the earnings call. I don't know. Ugh. Ugh. I've been live for I don't know how long, you guys. If you guys are just tuning in, welcome. Probably going to call it soon because the Micron earnings call is going to start. Yeah, Five Below up 7% in the after hours session. That's pretty nice. When you look at the sector rotation chart right here, again, energy's been leading for months or weeks now, guys. Semiconductors back up, real estate and industrials creeping back in too. I probably won't play the MU call, but I'll give you the link to watch it yourself. Here's the MU call for anybody that wants to go ahead and watch. I'm not going to play a lot of these earnings calls anymore, you guys. I mean, the calls can be cool. I mean, if it's like a cool CEO. But honestly, yeah, it's not worth a potential copyright strike on our YouTube channel. You know what I'm saying? Yeah, we can take a look at what SPY and the Qs are doing. Bam, bam, bam. SPY and the Qs are both selling off. Thank you, sir. IWM, small caps, doing all right. SMH is selling off into market close. So it just goes to show what happens when the market gets pretty hot, you guys. I mean, a monstrous speed like that and the stock comes down. It's SPY at the 200-day. That's honestly such a good question. Let's take a look. SPY is so close to the 200-day SMA, it can taste it. It's sitting, the 200-day SMA is at 659.75. We are $2 above that at 661.43. Oh, wait. Oh, we're actually at it in the after hours session, you guys. We're literally on the 200-day SMA right now, like actually exactly on it. Eddie was the one that asked about that. But yeah, you guys, Micron earnings call is starting. The link is in the YouTube description. You can just find it yourself as well by typing in Micron Investor Relations and going onto the Investor Relations page if you want. But that's going to do it for us. If you haven't yet, hit subscribe before you leave and like the video and tune back in tomorrow. We're going to be watching the FedEx earnings call live. Yes, please tune in tomorrow. We'll see you then. Other than that, you guys have a great rest of your day. Peace.